with the budget this coming Thursday, there's a number of questions on investors' mind. First is what's going to be different this time around following GST and demonetisation. We're hoping really that there's nothing really too radical in the budget. We'd like the Finance Minister to do more of the same. Keeping an eye on the fiscal deficit, maybe keeping it within a range of 3.2 to 3.5, I think would be welcomed by investors, both domestically and foreign investors. I think if we can see some spending towards infrastructure, and particularly toward the rural infrastructure spending, I think that would give the economy the fillip it probably needs to accelerate its growth going into 2018, 2019. The second big question that worries the market, actually more than the first, is whether we're going to see any change in capital gains tax. We don't think so. I mean, if he does decide to tinker around with capital gains tax, it might be in terms of the number of years which you need to hold stocks before capital gains is not paid, so maybe from 1 year to 2 years. The reason we think maybe not is that the stock market is providing good divestment opportunities for the government, and obviously with the oil price where it is today, they need to bring in revenues from other quarters because they don't have the benefit of a lower oil price. So we think capital gains maybe not this time around, and that would be again a welcome relief for the market. So I think if the Finance Minister can deliver on those two fronts, stability whilst looking after the fiscal deficit, growth in terms of spending, in terms of infrastructure, then the economy in our view can grow between 7 to 7.5% in FY18-19, and that should be a very good backdrop for earnings growth for the first time in maybe 4 to 5 years of around 15%. So I think there's a tightrope to walk for the Finance Minister, but I think he should be able to do it. I don't think we're expecting too many surprises and too many changes, just more of the same, please.